Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, Friday we had that very strong non-farm payrolls report. Now that has put a potential October or even September rate hike back on the radar for traders, and that has driven a strong dollar. We saw payrolls beating expectations 280,000, well above the expectations of 225. You saw improving labour force participation, and also probably most importantly, we saw the average hourly earnings pick up 2.3% now year on year for that, and we're starting to see a little bit of traction in that. And as I said, we saw the dollar driving strength on Friday. A little bit of a consolidation early on Monday morning, but in light of the fact that we've not got a great deal on the economic agenda this week, certainly not until Thursday with the retail sales for the States, it certainly looks as though we could see a continuation of that strong dollar move in the early part of this week. Now, German bond yields have been another key focus for traders recently. Certainly big volatility in that market in the last week or so. You might start to see a little bit of a settling down of that, seeing as the whole Greece situation is just delayed for a few weeks, pushing that repayment date back to the end of June, and that could well see that bond yields start to settle down a bit. Although the volatility is still fairly high, you've still got the support forming above that 0.8% breakout level, and it is now trading between that and around about 1%, and that 1% is a key level, because if it breaks out above that, it will see a continuation of the upside move, the big breakout that could well target that spot 22% level. So big move still potentially there on the German bond yield. Now, economic announcements this week, as I said, fairly thin on the ground, so it could well be that markets do have a little bit less volatility this week. But certainly looking at the Forex markets, what are we looking at? Well, we've got euro dollar that has been just showing slight signs of a little bit of a near-term correction, coming back from the highs, helped by that payrolls data on Friday. A bit of a consolidation, but now we're looking out for this key support, the key old neckline at 1065. That's the big line in the sand that I'm looking out for. If you see a push below that on 1065, then I think you could start to see further weakness, further downside, back towards the key pivot levels of the big figure numbers, actually around $1.10, $1.09 and $1.08. Big pivot levels all around those points. So if we start to see a serious move below 1065, you could well see further weakness in those markets back down towards those levels. So for cable, we've got more of a corrective outlook on cable, actually, more of a weak move that we've got configured on that chart, and we've got $1.5440 is that key reaction high. The old support becomes new resistance, and $1.5440 is that level of resistance now. Looks like it's pressuring towards a move at 150.88, which is that key May low. Now for dollar yen, we saw a big breakout and a couple of weeks ago, and it's now hit that target of 125.70. There is no real reason why dollar yen can't continue to go further. It's got strong momentum, it's got very little resistance, it's up at multi-year highs. It's actually back at levels not seen since 2002. So you could well see further gains in that chart. Now, $1.30 is not necessarily out of the question, and that is your next real sort of psychological level that dollar yen will be looking out towards. It certainly looks as though that corrections and dips in that market continue to be bought into. Now, in terms of indices, well, we've got all these rising bond yields are putting pressure on the equity markets, and certainly none more so than the DAX. We're seeing the German bond yield pushing higher. That's pushing pressure on the DAX lower. DAX last week saw a move below the 11,167 key support, and it certainly looks as though on Monday that's continuing to go to the downside. Now, this sort of breakdown, if you see a close below that today on Monday, that would certainly reopen sort of levels that we've not seen since February. Old trading support band about around around 11,550 up towards 11,985 is that sort of band of support that you've got back from February. So the continued correction looks to be pushing on the DAX. S&P 500, interesting because we're outside of earnings season now. Nothing really positive to drive the S&P 500 forward, so it's looking for more sort of more macroeconomic issues, and certainly the focus on non-farm payrolls and the strengthening dollar is a big worry, because obviously the strengthening dollar and the fact that the market is now factoring in a move towards potentially of a September-October rate hike suggests that the market is not overly happy with that. Good news is bad news. Good news economically is bad news for the equity markets, and the S&P 500 is not benefiting on the back of that. So certainly still a corrective slide you're seeing on the S&P 500. 2068 is the next key support. FTSE 100, same sort of game actually. We've just broken below the key May low of 6,810. And that now suggests that we're going to be seeing moves back towards the next key supports that are just underneath the 6,700 mark, which could be seen. Now they are key supports, so they need to hold for FTSE to maintain this sort of generally sort of positive outlook, but certainly it's a corrective outlook within more of a trading band on FTSE rather. So in terms of gold, what are we looking out for? Well, again, the strong dollar is a big impact on this chart. Strong dollar is negative for gold, and we've seen the last couple of weeks gold under pressure to the downside, and we've now broken below the key floor of that 1178 old trading band. Two closes below that 1178 have now suggested that we're going to continue to push lower on gold. 1142 is the next key support, and it's not actually without possibility that we could see 1132 tested, which is that key November low, and that is actually a projection target from the breakdown as well. So the economic trading updates that we've got, the economic announcements we've got this week. We start off with China on Tuesday with the inflation data. Now Chinese inflation is forecast to continue to decline, 1.3% there on the Chinese inflation is the forecast. Now will that drive further expectation of PBOC easing? Then on to Wednesday, we've got the RBNZ giving monetary policy. Now again, that could put pressure on the Kiwi. We've got the Kiwi that has been breaking down and sort of looking like further downside could be seen. But if the RBNZ gives any sort of indication that it's not going to be cutting rates, then you could see a bit of a pop to the upside. So watch out for the Kiwi potentially on Wednesday evening. Then Thursday, we're looking out for those key retail sales data for the States. Retail sales in the US forecast to come in month on month up 0.7%, and that would actually drag that year-on-year data up for the first time, seeing an uptick since October. So that could add to the strengthening dollar argument. And then on Friday, we've got those Michigan sentiment data. The first look at Michigan sentiment forecast coming at 91.5, and again, that would add to that whole dollar strength argument if that were to be seen. So lots going on towards the end of the week. US based, but until then it's a little bit of perhaps a little lower volatility for you, but still a lot to keep you interested I think this week, and I wish you good luck with your trading, and I'll speak to you again next week. Thank you.